Welcome to my channel. I'm the Covered Call guy, and this is my journey to creating a $120,000 per year passive income portfolio. My portfolio currently yields about $70,000 a year, just about $6,000 per month. I will be reaching my goal using only Covered Call ETFs. And guys, I'm open-minded and open to all suggestions and ideas. Once I reach my goal, let me know what I should be, probably diversifying. I'm not selling any of my cover call funds when I reach my goal, so I won't be just selling out to rotate. I will be buying other assets, but I'm not sure which assets I'll buy. Let me know, guys. I'm open to everything new. Legal disclaimer before we start. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involves risk, including loss of principal. Always do your own research and consult a licensed professional before making financial decisions. I'm just some random idiot you found online and I could be completely wrong. With that out the way, let's get started. Today's video is going to be about the bull case for Bitcoin income and crypto income, getting your foot in crypto, having some type of relation to crypto. If it's not Bitcoin, it could be other strong contenders in the crypto field. This is going to be my case where, please guys, the bull course for Bitcoin and or crypto income, it's a portfolio necessity or yield trap. You guys decide, but for me, I'm gonna let you know, everybody should try to get their hands on some type of crypto, right? All right, part one, the mandate for ownership. I feel like if you guys don't have some type of speculative holding in the crypto field, right? It should be Bitcoin or another big one, ETH. But if you guys don't have it, I feel like you guys are missing out on something incredible that could change the world, and change how finance operates, change how money is what's considered money, right? So the indisputable case for digital assets. All right, so here's my indisputable case for digital assets. We'll start about Bitcoin, right? It's what I consider digital gold, right? Bitcoin is a finished system designed for one purpose: to be the ultimate non-sovereign store value, right? Is a programmatic scarcity, a 21 million coin supply that is capped and is enforced by math and code, making it verifiably finite. So there's only 21 million in supply. That's it. No more, no less. And once it's mined, that's it. No more. So that's what I love about it, right? It's a political store of value. Its value is not tied to any government policy or corporation's earning, offering a hedge against monetary debasement. As you guys know, the meme, right? The printer always stays on, right? Global and permissionless is a borderless censorship resistant network for final settlement of value. And for ETH, I'm not a big fan of ETH. I know some people are. I know some people choose ETH over Bitcoin. I'm more of a Bitcoin maxi. The reason for I put ETH because it is one of the biggest crypto out there, and it has a very solid backing in terms of popularity and a support, right? So this is the decentralized internet. If Bitcoin is digital gold, then I would consider ETH is the decentralized computing platform that uses that gold, right? So it's programmable money. Smart contracts are automated, transparent, and unstoppable, forming the base for a decentralized finance, DeFi, right? We'll just say DeFi for short, right? The dormant DeFi and Web3 platform, the vast majority of on-chain finance, right? NFTs and Web3 applications are built on ETH. It is a productive asset, right? ETH can be staked to secure network, earning a protocol native yield. All right, so Part two, my investment thesis, right? The case for Bitcoin income ETFs, right? So my rationale for Bitcoin ETFs is that one is portfolio diversification, right? Bitcoin offers a potential hedge and diversification benefit against traditional assets like stock and bonds, because again, stock and bonds really relate to, you know, how much you print, the corporate earnings, and it could be debased, and you might not earn as much, because if the stock goes up but by 10%, but you know, the dollar lost 10%, you essentially gain nothing. Income generation, right? I love to hold the underlying and get paid, right? And I want, if I'm holding a stock, I might as well get paid for it, right? Cover call strategies generate income from option premiums, solving for Bitcoin's lack of intrinsic yield, right? And reduce direct risk. ETFs remove the need for self-custody, wallet, and direct security management, simplifying ownership. And this is the rationale for Bitcoin ETFs. Continued, right? Enhanced cash flow. Regular income distribution provide consistent cash flow, appealing to yield focused investors like myself. As accessibility and efficiency, traded on regulated exchange, these ETFs offer easy access and potentially simpler tax reporting. And of course, it's volatility management. The premium income can partially offset price volatility, offering a smoother return profile. And then this is just how a covered call strategy works. For those who are new, welcome, right? So this is how a traditional covered call strategy works. In this case, it's going to be Bitcoin related, crypto related, right? So the ETF holds Bitcoin or Bitcoin ETPs, right? Which is the spot BTC ETFs. They sell call options on it. The funds sell call options, giving buyers the right to buy the asset at a future price. And then by selling it and a buyer buying it, we collect that premium, right? The fund collects an immediate cash payment, which is the premium for selling this option, and then it distributes to us, the holders. The core trade-off, you cannot have both. The growth goal, right? If your goal is to capture Bitcoin's explosive asymmetric upside, right, 100% rally, the strategy would be to buy and hold a spot Bitcoin ETP like IBIT or FBTC. They don't sell call options, as this sells away your upside. The result, you get full upside and full downside, 0% yield. So it's the growth, like a growth stock. But I'm here for the income goal, right? That's for me, right? My goal is to generate an extremely high yield. It could be 50%. I'm okay with 30%. The strategy, I'm okay with it being aggressive, selling call options weekly to generate the maximum premium. I want the result to be high yield. Full downside, I understand Bitcoin go up and down, so it is a rare upside cap. Right? I have sold my growth for income. This can lead to NAV erosion in a bull market, right? We'll see what ETFs, crypto ETFs, you buy and hold to try and not have NAV erosion. Right, part three, this is my A-list criteria for top ETFs, right? One, it has to have good strategy and management. Is it active? Is it passive? Is it weekly? Is it monthly? Full or partial, right? This is going to define my yield and growth trade-off. It has to be liquid, right? I want the ETF to be liquid. That means I can buy and sell easily, right? It can be easily traded. It has good value. Low asset under management is a major red flag, because then you might not be able to buy and sell, and low volume it's just, it has its own risk to it, right? And then the NAV trajectory, right? Is the NAV funds growing? Is there NAV erosion? Is there capital appreciation? And then the yield versus total return, right? Yield is just one part, right? But a good fund balance balances high income with a positive total return. So these are my A-list criteria. All right, this is my pick list. This is my number one. This is what I currently own, Neos BTCI, right? This is my balanced choice. It's the best class in right? As a market leader of almost $1 billion. Active management, right? The Neos team has been excellent in adapting the strategies. They pay monthly. I'm okay with monthly. I prefer monthly for the that way it doesn't have crazy NAV erosion, and they can participate more in the upside. They have positive NAV right now. So far, the track record, the NAV is positive. and they have an active treasury management, so it earns yield on T-bills and it's just another list for additional source of income. However, it is lower yield target, so that's the trade-off compared to other Bitcoin ETFs. In my opinion, this is lower yield, but it's considered high yield for me, so that works. I'm okay with that. And then number two, the max yield, right? Roundhill YBTC, right, is a systematic approach, a systematic rule they have, right? It's extremely high yields. Is 50, I think it's 50% plus or more they're aiming for. Is weekly option writing, so there's not much NAV growth. There can be not much NAV growth there, right? They have strong assets under management and liquidity. So with 300 million plus in assets, it's nice. It's above 100 million, which is one of my criterias. Systematic strategy, so that's either good or bad, but I put it in good here, right? It's rule-based approach. It's transparent and predictable. It does exactly what it will say, but because of that, it has severe upside cap, right? The weekly call dramatically limits the upside. You will miss all of Bitcoin's rally, and you know these Bitcoin rally can be crazy, right? They can go 10, 20, 30, 40, 50k in a span of a few months, right? And so this also leads to high NAV erosion, because in a bull market the NAV was significantly lag behind and it has to sell the upside for income, right? So this is only great for flat or bearish markets. Then my other top pick would be the max yield. It is active. It's from Amplified, baggy, right? It's similar to YBTC and it's high you go, but use an active approach to try and optimize weekly call rating strategies. All right, so it's a high yield. It aims for 30 to 60% annualized premiums. It is a weekly option writing, just like YBTC. It's actively managed, unlike YBTC, right? Because YBTC has a systematic approach, is rule based. Baggy has a manager actively selecting strike prices, which could lead to better outcomes. However, it still has a rare upside cap because of its weekly call strategy, and it has lower assets under management, under 100 million, right? So not really what you would want, right? You want that 100 million plus, because that's very, very liquid. And then pick four, right? I would consider this the other balance. It's called from Grayscale BTCC. BTCC. Okay, gotta give an extra seat there. I would consider a balanced fund from a legacy name in crypto, aiming to blend income with some asset exposure. One, it has good, strong brand recognition and experience. Grayscale is one of the most recognized names in crypto asset management. Is a balanced approach like BTCI, aims to balance both income with exposure rather than maximizing yield at all costs. Sufficient liquidity. Right now, the fund has enough to be considered liquid for most traders. And cautioned, right? In between strategy might not satisfy either max yield or max growth. So you have to decide, hey, is this for me? It's right in the middle. Which one am I aiming for? And it has a very high expense ratio compared to others, which can eat into total returns, since it's not max yield or max growth. So this would be a maybe, maybe not. And this is my last pick. This is what I would consider the growth oriented BTC Bitcoin Covered Call ETF from Global X BCCC. Yes, I think that's 3 C's. This fund is for investors who want some yield but not willing to sacrifice Bitcoin's potential growth. Right, this fits into the no severe upside cap criteria. Right, it has partial light override strategy. This is its key feature. Right, it does not write calls on 100% of its assets, or it writes them far out of the money. Designed to capture appreciation. That's great. It has active management. However, it has a much lower yield, which is a trade-off, which is not bad at all, right? Doesn't mean it's a bad thing. It's just depending on what you want, but lower yield is the trade-off, and it has lower asset under management. So this fund is much smaller and could poses liquidity risk. And then also honorable mention is blocks. I think this is going to be my next buy if I want to buy into another crypto ETF. Um, I right now I have it on my watch list. I kind of so this would be my strategic opposite, which is the growth, right? As a thematic growth fund, blocks is exceptional. I give it a 4 out of 5. It has a strong asset under management, a clear pick and shovel strategy, right? So it can do both and has delivered excellent total returns by providing equity-based exposure to the entire crypto ecosystem, right? So crypto is useless without that ecosystem. So right now I have my eyes on it. I will be um, keeping my eyes on it, and I will probably pull the trigger if I see a nice dip, right? So the only reason it loses half a star only is because it's an equity fund, so it carries the market correlation, and it's a single stock risk that a pure spot ETP avoids, right? It is not an income fund. This is my pure growth, so I am keeping my eyes on it. I absolutely love it. Um, I want the exposure to the entire crypto ecosystem, right? So this is just an honorable mention. All right, how to choose your pick. So this is my criteria, right? This is what I look for. Do I want to prioritize max yield, right? Choose a fund that right weekly calls. You accept high NAV risk and severe upside, so maybe not. Do I want to prioritize growth? Choose fund that only write on part of their assets or buy a spot ETP directly? Maybe. Or do I want to prioritize balance? Choose actively manage monthly option funds that protect the NAV. That fits BTCI. So that's where I'm going, right? I want that balance. I want a little bit of growth, and I want some yield, but it's okay if I don't always catch the bull market. I want to have some downside protection while getting a nice decent payment. So I prioritize balance. I chose BTCI because of that. All right, so this is the Covered Call guys questions checklist. This is something I would ask myself when buying into a Covered Call ETF. Right, I ask myself like my due diligence questions, right? Strategy and mechanics. So what is the underlying exposure mechanism, right? So it varies. BTCI use ETPs and futures, right? And futures. While YBTC, Baggy, BCCC, and BTCC primarily use spot Bitcoin ETPs, right? Does it invest directly in Bitcoin or ETPs? They invest in ETPs, so or derivatives like IBIT and FBTC. The ETPs host the Bitcoin directly. The fund itself does not. What is the target annualized premium yields, right? Varies by strategy. YPTC and Baggy target 30 to 60% plus, while BTCI and BTCC are more balanced, right? So I ask these questions: how frequently are options written, weekly, monthly? What fits my situation? What fits my um, uh, investing strategy and method, right? Where do I want to be, right? So right here, BTCI writes monthly, and it's lower premium but more upside, right? What is the historical volatility of return? Bitcoin, it's high. Um, the premiums income provide a small cushion, making them slightly less volatile than holding Bitcoin directly. So that would be a good thing. You gotta choose that balance, the max yield, the max growth. Which one would you like? And then some more questions. Like, what is the ETF's expense ratio? Because again, you're paying the fund managers a lot of money, and if they don't perform, you're basically losing out on a lot, right? What is a track record? I always like to see if they are at least a year old. If not, then let's see what's their strategy. Can it survive a year? Can it survive 3, 4, 5 years? Right? I want to hold these for long term. How sustainable or distribution giving? Um, is it sustainable, right? Is it too high? And where's the yield coming from? Where's the payment coming from, right? How is the NAV calculated and how often, right? NAV is calculated daily, just like standard ETF. So how often is it calculated? Well, how well is my Bitcoin ETFs going to be doing because of that? So you have to see. distribution, return on capital, or income, right? This is very critical because for max yield funds like YBTC and baggy, a large portion is often rock. This is the fund giving you back your money, but eroding your principal. So you have to see, is a good rock, is a destructive rock? We all have to ask these questions, and that makes you realize, oh, this is the research I have to get into. That would make it a good covered call ETF. And then ownership and risk, right? What are the token custody arrangements, right? I have, as the shareholder, I have zero custody, right? The ETF holds the ETP, and the ETP's manager basically manages the actual Bitcoin, right? How does the ETF handle forks or airdrops, right? I get nothing, right? Absolutely. I do not own any of the online Bitcoin, so I have no claim to any forks or airdrops. You don't understand that. You don't actually own the Bitcoin directly. Are there any counterparty risks, right? Risks with ETP providers, the options counterparties, if they fail to pay, and the custodian of the ETP Bitcoin. So I don't think a BTCI would have these, but if you choose some that are doing synthetic, then sure, you might have it, right? What are option strategy standardized or active, right? So for the most part, I would say that it's both YBTC, BTCI, baggy, and BCC are all actively managed, allowing the manager to adapt strategies. How does the ETF manage option rolling risk, right? This would be a core part of the manager's job. So then you have to look at the active management. Are they doing well, right? So BTCI has been doing amazing, superior, right? Performing in risk, right? What is the options? What is the impact of options on price appreciation, right? I want it to be less severe, right? Weekly is going to have more severe versus monthly, right? What are the risks related to regulatory uncertainty? Now, this is very high, right? This can change all of a sudden depending on how they are classified from the SEC. Right? A crackdown on ETPs or options trading could fundamentally harm these products, right? How liquid are the ETFs, right? You have to look at how big they are, what's their assets under management, right? The bigger it is, the more liquid it is, right? Are they locked up or redemption restriction? For the most part, I would say no, none of them are. As ETFs, they trade on exchange. You can buy and sell them at any given time when the market is open. Does the ETF hedge against price declines? I would say no. I don't think any of them that I've listed have hedge protections. And then market scenarios, right? You have to ask, how does it perform in a bear or bull market? What are the tax reporting documents and how they provide it, where you can find them, right? How old, if they're at least a year old, then you would have a 1099 to look at. And how does option income impact total return, right? So you have to look at total return equal NAV change. Total return equal NAV change plus distribution, right? If the NAV dropped 10% and you get 8% in yield, your total return is -2. So you have to calculate that. You have to see in your head, all right, is the fund old enough for me to be able to do this, right? What are the creation and redemption fees? As a retail investor, you pay the bid-ask spread. The spread is higher for lower under management funds like baggy, BTCC, and BCCC. That's just the nature of it. Nothing you can really do about that. It just decides if you want to pay the higher asking price, right? So how volatile or risk mitigated? For the most part, I would say these fund harvest volatility. They don't mitigate it. They are a bet on continued high volatility to generate the premiums. And then management and structure. What portion is held in cash or equivalent? Who manages the ETF and what is their experience, right? Like NEO's BTCI is well known for its experienced options team. Roundhill or YBTC is known for systematic income products, and Global X is also known for covered calls, right? How are pricing benchmark for Bitcoin established, right? For the most part, I believe almost all of the funds listed, the funds use real-time NAV of the spot Bitcoin ETPs they hold. Well, how transparent is the ETF regarding holding, right? You should be able to find all of the holdings that are been disclosed, right? You want to be able to go on the website. You want to see exactly which ETPs, future contracts, or options they hold. If they don't list it, red flag. Is it hard to find? Red flag, right? How does ETF comply with SEC requirement? For the most part, I think all of them would be okay. You shouldn't be buying random crypto. I mean, that's how you lose money. So these are the questions. These are at least 30 questions you ask yourself to do your due diligence. This is what I ask myself for for my due diligence for all of the cover calls and that I buy, right? I ask these questions. It doesn't have to be Bitcoin related, but these are the same questions that I kind of go through myself, and I make a list and I write it down and say, hey, you know what? If it can get at least 25 out of 30, in the green, positive, and 5 is like iffy, I would say, all right, I can do that, right? If it's under 25, then it's, for me, it's a red flag. Then that means that for me it's not going to be good. A buy is not going to even be a good hold. If anything, I'll get in, get out, right? So I like to buy and hold. I like it for the cover card to be semi send forget. I don't want to be in and out. I don't want to be an active trader, right? I want that passive. I want to be as passive as possible, that passive income. All right, thank you. Like, comment, subscribe. That's pretty much the end of my my rant and why you should be owning crypto and a Bitcoin income. Because if you don't, I feel like people are gonna miss out, right? You have to have your foot in the crypto world. It's like that person who bought Bitcoin at like $1. They're begging you, and I'm over here. Yes, not financial advice, but I'm begging you, like, oh God, don't miss out on this. It's a portfolio necessity. Like, have a little part of your portfolio, like in speculation, right? Because you never know. It easily turns from speculation to actual real life, real world asset in a matter of a week, and then you completely miss out on the run. And with Wall Street implementing and already using the crypto structure, it's just a matter of time that everything gets adopted, right? If anything, hold crypto as preferably Bitcoin as a digital gold, okay? Don't want anybody missing out. I want everybody to get rich, make money, and live that champagne life. So hopefully you found this video educational. Hopefully you've liked it. If you have any questions, comments, please leave it. If you think I'm wrong, leave it. I respond to everybody as much as I can. If you own any of the Bitcoin ETFs, or you think I've missed something, let me know. I strictly did just Bitcoin related ETFs. I didn't do any of the Bitcoin / ETH or other assets. I just did Bitcoin related because I feel like Bitcoin is the safest and safer crypto. So I don't want to mislead anybody new that's watching the video. So I hope you guys enjoyed it. I'll see you guys on the next.